All right, we're going to get started. The next panel is moderated by Alexandra Suich. Alexandra is the U.S. technology editor at The Economist magazine. The people at the back, can you please keep it quiet? Thank you. Those at the back. And so Alexandra is the U.S. technology editor at The Economist. She is come to us from San Francisco. Before this role at The Economist, she was the media editor. And before that, she was a financial correspondent. In 2012, she was named Britain's Young Financial Journalist of the Year. And she, like Siobhan, is also a graduate of Yale, but I think in her case it was history and African studies. So Alexandra, you can introduce the panel. Thank you for being here.
Thank you so much for having me. I never thought I'd be so excited to be in Toronto in December. So it's a pleasure to be here. I have a group of very esteemed panelists. I'm going to go through and ask my own questions, and then please feel free at the end. We're going to save some time for questions too, so please think of them. I'll start by introducing Andy here, who's with Google Ventures, Jerry, who's with Benchmark, Greylock. Next, we have Blair, who's with DFJ, and Trey, who's with Founders Fund and Palantir, who were previously at Palantir, and Umair, who is at Bessemer. So I'd love to start by, we'll go down the row, if you don't mind, starting with Andy. I've asked the panelists to prepare just a couple of minutes talking about what their investment thesis is for the machine learning space, and then to give an example of a company or two that they think exemplifies that view. So, Andy, we'll kick it off with you.
Sure. So rather than, I guess, talk about a specific thesis, I guess I'll speak a little bit about what I'm for in machine learning investments. The first, and I think it's one that you'll hear a lot from VCs regardless of the investing area, is certainly team. I think that, unlike or sort of in contrast to some other areas, this is a field where there's still a relatively limited supply of deep technical knowledge and people really skilled in the application of machine learning in business areas. So this is an area I really focus on. It's one that also we have in-house expertise. We actually have an engineering partner at our firm who is a machine learning expert, and he helps us analyze both the team and the technology whenever we look at an investment in this space. The second thing I'm really looking for is around data. So I think, as many of you here know, machine learning is most interesting when you have very unique and large data sets. So you see a lot of companies that come and say, hey, we want to do X or Y and Z in machine learning, but they don't actually have access to sufficient or unique pools of data in order to actually make that happen. I think also whenever you're training a set of algorithms, you really need ways to measure them. You need output. And so that's another thing that we look at is, do you actually have the ability to train algorithms in a cost-effective and timely manner? And finally, of course, we're looking for applications that have real business impact. So while we see lots of teams that are great technologists, it's rare to really combine that also with business impact that has real ROI. So I want to talk real briefly about one of the companies in our portfolio called Orbital Insight that I think is a great example of a company applying machine learning techniques to solve real business problems. So this company was started with the observation that there's really an explosion of geospatial data happening and to happen. So many of you have heard about a lot of companies starting to launch microsatellites. There's obviously lots of drones that are starting to be flown in commercial applications. And all of these things are rapidly increasing the amount of geospatial imagery data. And so this company felt not only is that happening, there's also a big back catalog of satellite imagery available. And so it wouldn't be interesting if we could start to analyze this at scale and create sort of a macroscope that could zoom out and look at interesting economic indicators and other things that can come out of looking at the complete data set. So the team here was one that really caught my eye. The CEO had previously led Google Book Search, so he was very familiar with dealing with large quantities of data and had already applied machine learning at scale. He also had a background in robotics at NASA and had worked at places like Climate Corporation, which have also previously applied machine learning in other verticals. From a data perspective, there's obviously, as I commented, a lot of geospatial data. What really struck me here is that they'd already gone out and secured very interesting business relationships with some of the biggest holders of this geospatial data. And then the first things they were looking at were things like financial indicators. So trying to predict things like crop yield or oil sitting, waiting to be refined. And these are indicators that data is available on a historic basis. So they had a way to train these algorithms. It's just they wanted to be able to give their clients access to this data before government-published indicators, for example, were actually available. And finally, from an application perspective, while we looked at the company relatively early and invested in the Series A, they already had paying customers from hedge funds and a pipeline of other industries that were interested in this sort of macro-level data.
So, Indy, it sounds like you're not interested in companies that don't bring their own data or have a way of looking historically.
Yeah, it's not. I wouldn't quite characterize it that way. For example, Orbital Insight again doesn't have any completely proprietary data, but they had a very unique business model with respect to gaining access to that data.
I'm going to jump back, Eric, from Excel. If you don't mind giving us your investment thesis and an example of a company that underlines your interest in machine learning.
Sure, yeah. So our investment thesis, particularly early on, is I don't think it's unusual, but it is, I think, very reasonable. You're looking at the team early on, and you're looking at the problem area that they're going after and how attractive that market opportunity is. The area that I wanted, or the company I wanted to talk about, was a company named Vectra that we invested in about 20 months ago. And it was the combination of sort of data science, intelligence with security and cybersecurity. And so the basic thesis was the bad guys are getting worse. They're getting more organized. The current round of, there's kind of an arms race that's going on. So that's always good from an investor point of view, that there's going to be this ever-increasing amount of spend to prevent the bad guys. But most of the most of the defense had been on the perimeter. That's where a lot of the spend had gone on in enterprises, is the perimeter. And so inside is where we thought there was a big opportunity. Bad guys get in, you're already infected. Here's an opportunity for big data and for analytics and various techniques to try to identify these guys that are breaking in. When you look at the ramifications of what happens with breaches, you see at its worst case with Target, CEO and CIO losing their job, you know that they're going to be willing to spend money to try to prevent that. And so the challenge technically for the team was to combine data science with security research with sort of a systems mentality. And that was sort of the motivation behind the investment, and that has led. One of the challenges, though, they faced was kind of that trade-off between identifying anomalous behaviors but not creating an enormous amount of false positives that would generate tons of alert storms that waste security operations teams' times. So we were looking for the applied technology to lessen the workload or to focus or prioritize the workload on the scarce security operations team so that they could better focus their energies on addressing the problem.
Okay, thank you. Jerry from Greylock.
Hey, so let's talk about investment theses in big data and machine intelligence and AI. So when I think about this space, machine learning is better math and better programming in this holistic way. And I feel like ML permeates almost every company we invest in now. The fact that Amazon has Amazon ML, Azure ML, it's really making machine learning, that power, reachable to a majority of developers fairly quickly, fairly cheaply. And so I think about that as core IP in most of the companies we invest in. And when I think about the deeper machine intelligence and artificial intelligence, then I start wondering, okay, like the computer vision demos we saw today, is there a generalizable platform that's very horizontal across many verticals, or do we solve a vertical business problem, be it agriculture, just life science, discovering drugs, construction, healthcare, etc. And that I'm still formulating a thesis in terms like I identify large verticals, but we haven't made aggressive investments in any of these verticals beyond one or two. So when I take a step back and say, okay, what are horizontal platforms, horizontal problems that machine learning, machine intelligence are addressable to? I think Andy said earlier, looking for 3 or 4 things that humans can't do. It's a size of data or a data problem or complexity that the human brain, as awesome as it is, can't really grasp, graph relationships 3, 4, 5 relationships deep. It can't imagine combinations of data and relationships that are so far afield or would take a long time for people to comprehend these things. And so we put an investment in a company called Trifacta over 2 years ago that's in the data wrangling space. It was co-founded by one of my favorite people in the world named Joe Hellerstein, who's a professor at UC Berkeley. And Trifacta tackles this problem of data wrangling. And 80% of any data problem is cleaning and wrangling the data. It used to be called ETL, extract, transform, and load, but really you have messy data. It could be sensor data. It could be data from a click stream of a website or your mobile app. But how do you take that messy data and convert it into a form or function that's usable by analytics tools or visualization tools, etc.? And so what Trifacta does, it does this wrangling process, but it does a combination of a visual wrangling to show the individual data scientist, what the data is doing, but it uses machine learning to be predictive. So based upon how you're changing the data, cleaning data, editing the data, it will use machine learning to basically change, predict, and recommend ways to change and improve and clean your data that it thinks you want to use. And it's always improving upon those algorithms. And so the power of Trifacta is, I think near term, we're not looking at programs to replace humans, but it lets humans be a lot more productive. So what Trifacta does is really takes a job that took hours, enough days and weeks, and lets you finish it very, very quickly. So that's, I think, a great example of a very horizontal problem that we invested in.
Thank you. Blair.
Hey, so I'm going to stand up for a second because I took the red eye in. I think it's going to be a good idea to get some more energy. So I'll share a couple thoughts. I think I'm the only guy with slides, so I'll go through them very quickly. I always like to start with the Adam Smith quote about, back in 1776, he figured out that smart people, experts in their field, ultimately, so there was some guy out there who was going to automate his job, lower the cost of his service for everybody in the economy, and then society would cumulatively move forward with more and more automation, lowering costs of all sorts of important things, so we can all benefit. And so, in a way, when you look at deep learning and machine learning, it's just more automation. It's not any different from, back in 1776, what Adam Smith observed, except for one thing, which is really exciting. It's the first time we've seen the automation of intuition, not just systematic logical processes. And so, there's a bunch of reasons why we're excited about deep learning and machine learning in general. One is the massive progress we're seeing in things we thought were just impossible to automate before. And so, I've ridden in a self-driving car. I live in Palo Alto. I see them driving all the time on the streets of my neighborhood. I don't think most people know this, so I, feverishly went out and bought Google stock once I saw these things actually working. But it's a big deal. Like, cars are driving themselves in Palo Alto on the road. And there are a bunch of other things we never thought would have been automatable, like credit decision-making, human radiologists, ultimately one day venture capitalists picking deals that I think will get automated in my lifetime, and I'm excited to be part of it, and DFJ is super excited to be part of this. So we're seeing massive progress. We're excited that machine learning could have the potential, Jerry just mentioned this a little bit, but could have the potential to be a generic platform where it's like a tool set, kind of like marketplace technologies are a tool set, or a mobile phone is a tool set, or the Intel x86 was a tool set that we still use to this day. You could imagine a general learning machine would be an incredible tool set, and I'm not sure that we're quite at the point where we can call these technologies a generic tool set, but I think that day will come. And then the other thing that we as venture capitalists spend a lot of time thinking about is, okay, there are many ways to improve the economy and improve society. Not all of them justify sustainable, profitable businesses. Machine learning and data businesses in general have a tremendous network effect, which is a very, very big deal. These are the most profitable, most exciting, most interesting businesses of the last 15 years. Even going back in time, 100 years, you could argue credit bureaus were an example of the network effects, data business, long before computers. But in any case, we see defensible, exciting businesses here. And so there's two I'll mention very quickly. One is Nirvana Systems. They are building tools to help large companies with lots of data leverage deep learning effectively. They're also doing some very interesting things with their own compute fabric. So CPUs are generalizable, low latency processors. GPUs are higher latency, but more specialized, but they don't scale. So Atomwise, talked about their paper before. They trained the net on 6 GPUs, and I think it took a week to train. You could imagine training much faster would be much more valuable. They could iterate on different shapes and designs of their net, and so Nirvana will help people do this. And then the second company is Atomwise. You already heard from them, but they're certainly one of these examples of a vertically focused data network effects business with tremendous potential.
Thank you very much. Trey, you're up.
Cool. So I want to start by saying I'm kind of disappointed in the nerd conference so far in that we've been here all morning and no one has said anything about the fact that we're less than 72 hours away from finding out that Jar Jar Binks and Luke Skywalker are both Sith Lords. So 2 words, Star Wars. Everybody should be excited. I'm really disappointed that no one else has been as excited as I am. I have X-Wing socks. All right, so now that we've gotten past that, I think we can really start. I think all of these points that have been mentioned so far are totally right. Team is really important. Kind of the vertical business is really important. So rather than focus on the things that I think are like big categorical venture things, I want to talk about some assumptions that we've heard from a lot of companies working in this space that we think are just wrong. And this is a good starting point for trying to evaluate whether or not a company is venture investable. So the first point is that the enterprise in general, specifically speaking about enterprise companies, the enterprise in general is less competent and more misaligned with you as a startup than you think that they are. We oftentimes have companies come in to pitch, and they say, yeah, we're going to work with like the biggest companies in the world, and we've created this API, and we're just going to give them access to it, and they're going to like create this really valuable thing out of our tech stack. And we just haven't seen that really work very well. The best companies that we've seen, particularly in these more complicated kind of machine learning, deep learning spaces, are people that are focused on actually delivering an outcome or a recommended action to an enterprise. So one example of a company in this space that we've recently done an investment in is called Tachyon, which is a machine learning platform for petroleum engineering, working with oil and gas companies. And so what they're doing is they're taking sensor data from wells and making recommendations to field operators as to what the field operator should be doing with the specific wells, whether it's cyclic steaming or CO2 flooding or water flooding or letting it lie and not doing anything with the well. And they're seeing efficiency improvements of like 15 to 30%. So there's also like a novel insight in this that I think is really compelling in that as the price of oil goes down, distressed wells have to do better on the efficiency side in order to eke out profits. And so Tachyon has like this really cool timing on the price of oil, although it's hard to argue that it's universally good for Tachyon. I'm sure there are things that are challenging about the declining price of oil. But the timing's right, and also there's like a novel insight in the technology about improving the efficiency. Which leads to the other point here, which is there's always a question around whether or not the company is driving a significant outcome to the customer. So the way that this generally gets framed in founders fund terms, and if you've read Peter Thiel, my boss, his book 0 to 1, it talks about this in great detail. It's this concept of we don't like to invest in competitive businesses, we like to invest in monopoly businesses. So is this business truly singular? And oftentimes you'll see that these singular businesses have a tendency to kind of suck up all of the capital in a vertical. And so we're trying to find what are those companies that are driving those massive outcomes that are going to be able to pull most of the market over to them with a dominant position. Another way of framing that is, like, does this company have the potential to become one of the biggest, most important companies in the world? So we're less interested in investing in like companies that are going to have good financial outcomes, more concerned about what are going to be the 20, 50, 100, 200 billion dollar companies.
Thank you. Mayor.
So first of all, I did open my Star Wars Moleskine just this morning for the conference. It's sitting over there. I went Stormtrooper, not Darth Vader. I'm not going to cover some of the points that have already been covered, but team is really important, TAM is really important. What I wanted to kind of go into is, at Bessemer, we look very much at roadmaps, and what we see is machine learning, AI, and some of the algorithms that are being developed, some of the tools that are now available, are going to be used by companies across the spectrum. An example of an investment that can kind of explain how this works is, we have an active cyber roadmap, and a company we invested in earlier in the summer is Distill Networks. They basically build a technology to protect your website from malicious bots. So what are bots? Bots are programs that connect to your website. And we saw the trend of the number of bots growing. So I think the recent study shows it's about 60% of web traffic is bots, 30% of web traffic is malicious bots. These could be anything from people doing click spam or people trying to read content of your website or denial attacks. And if you're a company like Crunchbase or Ticketmaster where your content is important, you need to stop these bots. The traditional software in the space tends to be more focused on static situations, rules-based, not really adaptive. Distill basically attacks the problem with a level of machine learning, where instead of being static, they're building a dynamic system that learns what the bots are. And kind of the earlier points, it's all about, do you have access to a high volume of data where you can train the models, where you can get feedback to improve the models, and kind of hit all of those. One, access to massive volumes of data across their customer base. Two, they got their predictivity very good simply because they were able to get feedback from the users. If the algorithm thinks you're a bot, it shows you a captcha or some type of Turing test. If you pass it, you're not a bot, it gets feedback, the algorithm improves. The second part is it's a network effect, which is the more the customers use it, the better their data and prediction becomes. And so it kind of hit all those bars of they have a real business, it's solving a real problem, and it's got the right level of technology where machine learning can be implemented and can be effective. And I think it's important to think about all of those as you're trying to develop a solution for a business. It can't be just about we've got machine learning, because people don't buy just machine learning. They're buying an application of that machine learning. Most people don't even care about whether it's linear regression or classification or categorization. They care about we stop bots, end of story. Right? And so I think that simplicity of the application of machine learning is really important.
Okay, thank you. I'd love to pick up on the theme that Trey alluded to, where you have these outsized ambitions and expectations on the part of startups that are then faced with the bitter reality that large corporations don't want to use their product, or if they do, it's going to take months or years for it to be integrated. Could you guys tell me a few stories about how you have those conversations with your entrepreneurs and what the adoption rate is like among companies and different strategies that you use? So Trey, do you want to take that one first?
Yeah, I mean, the reality is that this is really hard, selling into enterprises. There's a lot of different strategies that we've seen companies take to win business. Sometimes they have relationships that already exist in the market based on their previous experience, which is usually a huge heads up. Like, let's say you're a founder that spent 20 years in financial services working with chief executives of large banks. That's usually a pretty good start for a sales pipeline. The places where we've seen the biggest mistakes are where people don't know where to go into an organization. So they're either like selling below the decision maker or selling above the decision maker, and they don't know how to target the right space. Or the worst case scenario is that they think that they're going to use a partner strategy. What we've seen from partnerships is that basically the only people that are less competent and less aligned than an enterprise is a professional services partner. So even if they claim that they have your best interest in mind, they really never do, because they're optimizing for completely different things. They're optimizing for butts and seats, revenue that they might be trying to generate, or they might have some sort of grand strategy for like building a platform like a Frankenstein monster that's going to eat everything that comes in the first wave. So it's just a really, really poor alignment. So we generally try to encourage our companies to have a vertical strategy where they're delivering an outcome to the customer, and then build a strategy that involves mostly sales into places where they have a network that they can actually utilize.
Excellent. Does any additions to that?
One other thing I'll mention. So I always think it's helpful to understand the incentives of who you're selling to, like really deeply what the incentives are. And oftentimes when you do that, you understand that you have to force people to buy your product. And you don't force them directly. You force them typically indirectly. And so we have a company called Box, which had a tremendous amount of success scaling their file storage system into large accounts like GE and others. And the way Box started is they were a free tool that allowed anybody in a company to their data back and forth. And so what happened naturally is Box and files stored on Box proliferated very far and wide. Information that was proprietary and important to companies was kind of out there on the web, in the cloud, in other companies' premises. And in that state, it was actually pretty straightforward to go to chief information security officers and CIOs and say, hey, your data is out there on our system. Do you want visibility on what's happening, and do you want to secure it? That's kind of a bottoms-up, in effect, we force you to realize how important it is to pay for the enterprise-level tools. We've seen that strategy have a tremendous amount of effect. And there are others like that, but typically, yeah, like you have to create either some Trojan horse into the enterprise, or you have to create some sort of bidding process where, say, you've got 3 big companies that want to use your system, but the urgency to act only comes when you allow one of the 3 to use it now. And it's a really important system that they're really excited about using. But you have to think of that level of detail and be that tactical, like literally about every enterprise selling decision. Otherwise, it just, you're faced with apathy and long sales cycles.
Eric, did you want to add?
Yeah, I was just going to say you have to think through who your real buyer is. The enterprise is this vast array of people, right? Of different roles. Think about, you have to really hone in on who your buyer is. If your buyer, for example, is a developer, there's a company, Atlassian, went a long time without ever having a sales rep, right? Because they sold development tools online to a developer who would just download it, use it, buy it. They had inside sales, basically, that would sort of help her customer success people. So in their particular case, their buyer was one that you could access without having to go through all the hierarchies of management and IT. In another situation, in avoiding all those hierarchies, which they're not always bad, but if you can avoid them, you can go a lot faster. There's a company named Slack, which has come up with a great collaboration tool, which started with very small companies that started to, kind of create the buzz around it, and they started to share, and now it started to permeate the enterprise, again, without a single sales call ever taking place. For security companies, it's just, you have to go in through that chief security officer, and it's just, it is a lot of hard work. You still got to think through who that buyer is, but you do have to do your own missionary work. I agree completely with the point of, don't hand your missionary work to a channel. You have to do your own evangelism, especially if you do have to go through the enterprise as you would in like a security product.
I'd love to ask you about the Valley and what the mood is right now. Some people say that, the party's not over, but the cops on the curb ready to go in. We're seeing valuations under pressure in most sectors. Is that true when it comes to machine learning? Have we seen, and the stage that you are investing at, have we seen pressure? And what kind of terms then are you getting from entrepreneurs? Jerry, I'll have you take that one first.
I hate when parties end.
In all like a true venture capitalist.
Yeah, I don't know what phase of the bubble or market party we're in. I would say following observations, I think valuations are definitely getting a lot more scrutiny than they were in the past. I think the public markets have always been rational, so I think the overvaluation, if you will, we're in the late stage privates. And I think the disconnect between that late pre-IPO round to the IPO round, you're seeing from a bunch of the recent IPOs an adjustment, right? So I think that's where the valuation deflation will happen first and foremost. I think machine learning, I don't know where we are in the bubble, just because I think we said earlier, you can either say there is an order of magnitude too much funding in machine intelligence or not enough, right? And I would argue there's probably not enough. And, I would say there's two questions. There's valuations in the category, and is there enough capital being allocated? And they're related, right? So the valuations are better, but you put more capital to work. I do believe what I said earlier, machine learning and some of the technologies that we're talking about today are going to permeate every single vertical, every single company, from your wearables, your health, security, online concierge for scheduling, computer vision. And so I do believe there's probably not enough machine learning out there. I say independent companies doing AI research, deep learning, I think that's going to be tougher, because I think in a market that's facing increasing scrutiny on profitability, cash flow, or cash burn, you have to show a path towards revenue faster. And typically a lot of platform companies take a longer time to develop. You have to have a bunch of applications built on top of your platform to see a lot of revenue. So I think we're going to face more pressure to show revenue faster the next couple of years.
Umair, do you agree that not enough capital is being allocated to machine learning?
I think it comes back to horizontal versus vertical. I think that there's two dimensions. One, like Jerry said, we've got companies that do have funding that are starting to apply machine learning, and I think that's a healthy amount of companies, whether it's driverless cars or cybersecurity companies or rocket ship companies. There is funding there. But I do think when it comes to the deep technology, this is one of those places where it's a university plus industry piece, where you're not going to solve the funding problem just from the VCs. Our investment thesis has to be different. Our timelines are somewhat different than some of the research that goes on. So I think you see some of that, where maybe not all platform companies are going to get funded to the same level. We're looking for applications, because that's easier to figure out how you're going to go sell.
How much do you think valuations are off from what they were 6 months ago? Andy, do you want to take that one?
I think it's fairly stage dependent. We've seen the most valuation pressure kind of for later stage companies. I think as people start to realize that late stage valuations may have gotten slightly out of hand in the private markets. That's rippling back a little bit into sort of mid stage. We're not seeing a huge amount of valuation changes at the early stage of companies. So it's less about a sector learning and more about stage of company.
But so early stage, you haven't yet seen it play
Not
out.
significantly. Not the way we've seen it at late stage rounds.
Okay. Yeah, Trey.
I would also add that there's a big difference between companies that are doing machine learning and companies that say they're doing machine learning. We generally say at Founders Fund that usually when people say big data and machine learning, we baseline with, this is fraud. Convince me it's not. And I think that that's like a really good metric to apply when you go into these conversations.
So the non-fraudulent words are?
Well, I mean, the thing is you could be a really good fraudster and use all the right words, but that doesn't mean the technology actually works.
Actually, that's a good point. It's because of Amazon and Microsoft and others having this machine learning capabilities as a service, it's easy to claim you have machine learning, but to be able to show that you have the data, you have the label data, you're thinking about the feedback. A simple question can be answered in one of two ways. And it's interesting, you ask the question of label data or quality of label data, and that usually tells you if somebody's actually thinking machine learning, or they're just like, yeah, we turned on this web service API from Amazon, we're good, right? Like, isn't that all we had to do? So I think there's a thought process there, which I do agree is very important to have.
Yeah, I think you can actually look at, I know Siobhan included Palantir on the machine learning slide at the beginning, and I was one of the early employees of Palantir. You can look at Palantir's biggest deployments and use that as a proxy for places that haven't figured out how to use machine learning. Because Palantir is essentially just a platform that's set up to reduce the friction between a human and a computer. It's not technically applying machine learning algorithms. It's just saying we're going to make it possible for a non-developer to write SQL queries, essentially, in an intuitive way. And so, of the Fortune 100, a huge percentage of them use Palantir, so I think that represents an opportunity for people in machine learning to figure out how to do real work with real companies with real problems, which has really not been solved.
The other thing I'll say about that, just real quick, because I think it's important. So, selling machine learning technologies to enterprise companies, other than kind of as a platform enabling them to do lots of things, which I think will be a great business. We have one investment there. There's probably room for a few companies. But other than that, like these basic enabling tools, a machine learning pitch that's truly interpreted by a leader at a company is, I'm going to automate some major portion of what this company does and replace a lot of labor. That's a really hard pitch for any incumbent to make internally. I spend a lot of time looking at insurance, for example, and financial services in general, this is true, but in insurance, financial services companies are very, very well known for talking about how many engineers they employ. It's almost like they're bragging against relative to each other, like on the number, like, oh, I have 3,000 engineers working on this problem. I have 4,500 engineers, and Instagram had 12 people working on this same problem, and did it pretty effectively. And so when you see that kind of mindset, it can be very hard to sell in because you're literally causing these people to change the structure of their organizations, which to me creates a huge opportunity to create new companies from the bottoms up that are building the insurance company of the future that has 100 employees, or the bank of the future that has 100 employees. That's great, by the way, for all of us that use these services and pay a massive overhead tax to all of the people who are running these processes inefficiently. But as a VC, it means we don't hear the words big data and machine learning at all in the pitches. We hear the words, I'm building an insurance company, or I'm building a bank. Totally different. Not ML in the pitch, but absolutely ML under the hood.
As you rank your anxieties as investors, how do you rate the idea that the startups you're investing in are going to be outdone by their predecessors, the Googles, Apples, Facebooks, Baidus of the world that have a lot of expertise in this area? Is there really going to be a huge market for the startups that you're backing? Andy, can I start with you? Because you said an interesting place here.
Sure. Well, I think we certainly look for startups that are going after things that are probably different than what those big companies are going after. There, I think it's really more of a question of talent, right? I mean, it's no doubt that some of the biggest tech companies in the Valley are hoovering up lots of machine learning talent and willing to pay fairly top dollar for that. So in some sense, it's really, the way I look at it is more, can the companies that we're funding attract the best talent to them, or does that always go to the big tech companies?
And how do you answer that? So while Google is buying up the best talent, how does Google Ventures for its portfolio companies deal with that?
So a big part of that I think does come back to team is, what we've seen is if you've got really top machine learning experts and expertise in the company, that helps attract other talent into that company, right? People want to work with other smart people in their field, and then they also want to work on problems that they find really interesting. So I think it's the combination of those two things that helps pull talent in. And then totally separately, we also have a technical recruiting team that their whole day job is helping our portfolios find technical talent.
Okay. Any other talent recruitment schemes that you want to share with the audience?
Yeah, actually, Tachius, the company that I mentioned, had a really interesting strategy with recruiting where rather than use one of the more common coding languages for their platform, they decided to use F#. And the reason behind that was that they could be the only really awesome Silicon Valley company that was using F#. And so the entire community of people that were proficient swarmed around them and gave them this massive leg up early on in recruiting. I'm not saying that everyone should do this because it's kind of a crazy idea, but it worked for Tachius.
All right. Before I open it up to questions, I'd love to kind of do a quick rundown, starting on the opposite side. Joe, in his opening remarks, asked about short-term market for machine learning, but also long-term market. And I'd love a prediction. You can take either short or long-term, but I'd love a prediction about how the market's going to evolve that defies the consensus view. Can I start with you, Mayor?
Long-term, our kids will not be driving cars that we believe are cars today. And it's going to be because of machine learning that there'll be a new car company that will be just different.
Beyond Tesla.
Yes.
Trey.
So my parents' generation grew up with Star Trek and the Jetsons, and my generation grew up with Elysium and Minority Report and all these dystopian views of the future. And I think that's really sad. And so my hope for the future, I don't know if this is what is actually going to happen, but my hope is that we can return to some more optimistic view of technology and what that's going to mean for ourselves and our children.
Blair.
Yeah, I think that's a great vision. Definitely. I think, I'll just throw out some thoughts. I think I'm totally on the same page with you about what the future should hold. But I think if you see, so this is long-term prediction. If you hear somebody say, my job is too specialized to be automated, or, I worry that this automated thing won't be emotionally savvy enough to interact with me, in the long term, I think those people are just completely wrong. Those things will all be automated, and we'll be better for it, because all of these expensive things where the practitioners are charging incredibly high for a variety of reasons will be free. Imagine the developing world with a free dermatologist. They already have smartphones. Imagine them taking pictures of their skin and getting free diagnosis. Why does that not exist? That should exist. We've seen algorithms actually pitched to us that are effective enough to do that, and people are looking for business models. But think of all these expensive things that we benefit from here in the developing world cannot benefit from, that could be free if they're automated. So I think that's kind of a long-term view. In the short term, I think it's going to take much longer to get there than people think. So self-driving cars, we have a couple very exciting things going on that we have a lot of visibility into. Obviously, we're investors in Tesla, as well as a couple other unannounced things. They're pretty close, but I think they're a little further than people think. And then so many of these other ideas, certainly around robotics, like just the mechanics of climbing stairs and things like this, they're actually quite far off. So I don't know if that sums it up for you. Kind of
That's good.
Long-term prediction, and in the short term is maybe not as close as we think.
Thank you. Jerry.
In the long term, I'm actually optimistic, like my panelists. I'm hoping machine learning or AI can solve some of these really hard problems like climate change or optimizing our cities or solving healthcare. These are issues that either we're unwilling to tackle or we don't have the technology to tackle now, and that I'm optimistic that we can actually design systems to solve things like global warming and other issues that we seem to be having issues now. And in the short term, I wonder if Trey has extra tickets for the premiere on Friday night.
Our headquarters are in Lucasfilm's headquarters, so we have special access to a lot of things.
Ooh. Andy.
Certainly in the long term, I definitely hope my car is driving itself. In terms of being contrarian, I'm not sure I have a great contrarian view when it comes to the long term. I definitely share the optimism on the panel here, though, that I believe these technologies are going to permeate essentially every aspect of our life. And my guess is we're not going to spend a lot of time talking about machine learning. If we flash forward in the future, it's just going to be a part of everything.
Right. There.
You count me as a +1 on the long term. Obviously, I came to this conference from San Francisco, so I'm clearly a believer in the long term. In the short term, though, I guess I would challenge the entrepreneurs who are very ML, AI focused, that in the short term, don't misjudge how impactful workflow and design can be on the product. The engine of ML may be fantastic and may do wonderful things. But more impactful to the business, at least at this stage, in my opinion, and observing what's going on, actually is the productizing of that for particularly a vertical. But workflow, design, user experience, those aspects should not be underestimated. They're very, very powerful, and they give you long-term differentiation when someone else comes out with a better algorithm, because you will already be embedded into the workflow.
Have any of you seen anything interesting going on with bringing machine learning into venture capital?
We're irreplaceable.
That's an example of what I was talking about. We're not irreplaceable in the long term.
I was wondering, yeah. Anyways,
the problem with that is that if there actually is some sort of machine learning in venture capital, then there's no edge, which means that everything will be fairly priced, which means that there's no money to be made, so it will cease to exist.
Yeah.
Or companies will get started at lower cost in a more deterministic way and make the world a better place.
Thank you to the panelists. I'm told that we're just going to go straight to the next session, but please ask your questions of the panelists after this during lunch, and thank you so much for listening.